Knock, knock, everybody. Derick Van Ness here, wealth strategist, investor, and life adventurer. And I got a doozy for you today. If you are interested at all or paying much in taxes, you're going to want to hear this because we're going to be talking about the 3 different types of tax strategy, the 3 levels. And nobody's talking about this. It's super, super important because especially with the things that are happening with the new administration and some of the laws changing. But even before that, once you start making a couple $100,000 plus, taxes get incredibly expensive, and I don't want you to overpay even 1 cent more than you need to. So we're gonna knock this out today. So by the end of this video, you're gonna understand where you're at, what tier, and the types of things that are involved there so that you can make some decisions, work with your CPA more effectively, or if they're not on board, find someone who is. You know, we've got people on our team, of course, but also there are other good people out there. So let's jump right into this. So the first thing that most people don't understand about taxes, they think taxes are all about write-offs, right? I want to write this off, I want to write that off, and most of those are business expenses. And I'm speaking to you as a business owner here, right? Where you spend money and you don't have to pay taxes, and that's great. I mean, you should absolutely be doing that. That's like kindergarten level. If you're not doing that, you're doing everything wrong. But if we move up the ladder just a little bit, there's some things that you can be doing that I would call your baseline tax strategy. So write-offs are part of that baseline tax strategy. This is stuff everybody who's a business owner should be doing as long as it applies to you. So there are things like how to rent your house to your business for things that you use your house for. If you're not doing that, it's something called the Augusta rule. You want to be doing that because that can save you an extra $5,000 to $10,000 a year, right? And other examples are figuring out how to involve and pay your children within your business, how you take your salary versus your owner's draws or equity. If you're not doing that, there's strategies there. Basic corporate entity structuring. If you're still operating as a sole proprietorship, chances are good you're missing some opportunities there. And then basic write-offs, home office, mileage for your vehicles that is appropriate. Like this is all really basic stuff. So there's no like golden nuggets there unless you're not doing those. If you're not renting your house out, if you're not paying your kids, if you're taking all your money as salary, you're getting wiped out. You're in elementary school level. I don't say that as an insult. I say that to wake you up because there's no reason to give that extra $5,000, $10,000, $20,000, $30,000 a year to Uncle Sam. He just doesn't need it. He's got plenty of money. So that's where most people end off. And what I find is most of my clients who are making really good money, they're like, yeah, I've written everything off and I still have $200,000, $400,000, $600,000, $800,000 of taxable income. What do? I've done all my write-offs. I don't want to just go like give all this money to charity because I need it, right? So there's a second level, and the second level is what I call structural tax strategy. So these are strategies you can put in place that run in the background automatically for you and create tax efficiency. This can be things like putting your money into tax-free retirement vehicles where you put money in. So a lot of people are familiar with the Roth. We teach a banking strategy where you can build money up in there, and it creates this retirement income that you won't pay taxes on the gains when you get to retirement. So huge tax efficiency, especially because if you believe, like I do, the taxes are likely to go up. We're already seeing the first stages of that. Then this is going to be huge. You don't want to pay more taxes in the future by deferring tax, and that's a whole nother video, but you want to have actual tax savings, right? There are some entity structuring things that you can do where you can put money into certain types of entities and structure things. People are familiar with certain types of trust structures, entity structures. You want to do the right thing for you, but we've got some really advanced strategies that we help people to understand that can chop your taxes in half for all the income that's in those assets. That can be a massive, massive difference. It can cut hundreds of thousands of dollars of taxable income off of it, legitimately, legally, and doing the right things that the government wants you to do. And so there are things that you can be doing that work all the time for you. They're just part of your structure. They work in your background. They're systemic, right? It's part of the system that you create around taxes that's going to work for you. There are also like multi-year donation and other types of strategies like that really, they pretty much work automatically. At the end of the year, you got to do a little thing here or there or make an adjustment, but they're pretty automatic. So that's the second tier, and most people are not doing that at all. Just so we're clear. They don't even know this stuff exists. And what this really does is it shaves a huge portion of your taxes right off the top and puts your money into places that are tax efficient and creates tax efficiency so you pay a lot less taxes from the very beginning. And then the third tier is situational tax strategy. So this is something you do year to year. Are we having a good year? Are we having a bad year? What's happening with our cash flow? This is where you come into yearly transactions. Like this is where you can make a big donation to a 503c, right? And get a write-off there. This is where you can do tax-advantaged investments. There are investments out there, if you don't know, you can put money into those. And in addition to ROI, you can also get tax advantages. Now, I'm saying this, I'm not a CPA, I'm not a tax advisor, I don't sell these. You want to talk to a professional about it. We've got people on our team who are experts at this kind of stuff, but that's not what I do. And the intention of this video isn't to tell you, go do that, because it's not necessarily right for everyone. The idea here is for you to be aware that these things exist, because the situational structure from year to year, you can make tax moves. And if you've put the baseline in play, you'll have cash to move around. The ability to move cash around is super, super huge when we're talking about tax strategy here. And listen, if you can use some of that cash to move around and save yourself 50% tax rates, 45% tax rates, 40% tax rates, or even 35% tax rates, like that's a ton of extra money that you get to keep instead of the government taking it, right? And this stuff is all legit. But I just want you to realize, like if you're just doing basic write-offs, you're missing the boat. Once you start making a couple $100,000, all the write-offs are gone. You need that structural in place to like clean that stuff up for you every single year and have a plan there. And then as your ebbs and flows happen as a business owner, you're going to want to look at these situational opportunities. And listen, these change administration to administration, year to year, depending on what's going on with the economy and what the government wants to stimulate. New law changes happening all the time. So this is all situation. This is stuff that you manage year to year. But the good news is if you get the baseline stuff right, that'll take a little bit right off the top. Then if you have the structural layer in place, that will take care of the bulk of what's happening year to year for you. So you don't have to be so consumed by taxes, right? What I see happen so often is business owners let the tax tail wag the business dog. In other words, we're making business decisions based on taxes, not on what we actually should be doing with our business. That is not the way you want to operate. So this structural layer really helps to clean all that up. And then as we have the ebbs and flows, the ups and downs that are part of being an entrepreneur, that's what the situational tax strategy is for. And there are a lot of different moving pieces that happen there. But I just want you to get, if you've done all your write-offs, there's a whole lot more. There's 2 more layers to what you can be doing with your tax strategy. And most people are missing them. They're totally unaware. So if you want to know more about that, things that can work for you, we'd love to help you out. By the way, if this was valuable, hit that like button, subscribe down below. We do these kinds of videos all the time, and I'd love to have you part of the family. If you have questions about this stuff, please drop it in the comments. We'll definitely get back to you, because a big part of what we do with this is we're building a community where people can get information and do better for themselves. And the last thing I want to say is, like, if you want to see an example of one of these, go check out this video. Most people are unaware of research and development credits. You can get money back. We work with a ton of professionals and a ton of companies who get tens or even hundreds of thousands of dollars a year back on these R&D tax credits. So go check that out now. If you have questions about this, feel free to reach out to us. We'd love to help you, but now you know the 3 tax strategies and layers of tax strategy that can help you be a lot more efficient and effective. And we'll see you on the next video. Go check it out.